it just takes one or two breakouts. Like maybe it's some vibe coding thing, maybe it's some like prompt thing, like who actually knows what it is, where a bit of luck and a bit of skill, and then the whole AI space is talking about it as well, because it'll be a breakthrough not just in crypto but also in AI. So there's always that small chance, and that's why I think it keeps people interested in the ecosystem.
Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone. Welcome back to another episode of Bell Curve. You got me, Myles, and Xavier. Fellas, how's everyone doing?
Doing great. One short week off.
Missed you guys last. We had a full team offsite in Costa Rica, so I had a good excuse, but didn't get any tanner, unfortunately. But yeah, I have a good excuse. What happened over this last week with the two of you?
I'm in Australia right now, so calling in nice and early for this podcast, which is nice. So appreciate you guys in the afternoon over there on the east side of US. But yeah, here for the summer, so getting into routine this week, and yeah, it's been nice to be back home.
I've been freezing in Boston. It's been absolutely miserable, but year's off to a good start. No more I don't know, dog bite incidents or anything like that. We're getting over it. So
no more dog bite incidents. Sorry, buddy. Well, I think we can start this year off with a bang on the bell curve side of things by tackling, we hinted at the end of our commercial open source software episode that we're going to get into this intersection of AI and crypto. And, I think you can look at crypto and then eventually AI is the next big iteration of software as an industry. I think crypto took and ran with open source and, definitely created more opportunities for monetization. We talked about L1s breaking some really interesting trade-offs. But AI is redefining the game of software at the same time. And there are implications from everything like just SaaS as an industry and like pricing, doing kind of, fixed recurring revenue versus outcomes-based pricing. There is, people are looking at how product works within an organization, product and engineering. And, really, it was a very flashy part of the industry going into 2025, this intersection of AI and crypto. And I think the thought was, hey, there's this AI thing that's happening and this crypto thing that's happening. And man, wouldn't it be even more exciting if you smash these things together? And I'm curious what the retrospective was for the two of you. First of all, maybe we could just start with why were people excited about this intersection outside of potentially token go up, right? Maybe there's some bad reasons why people were excited about this, but what's the retrospective on why this might not have taken off as much as people thought? And what was the initial real kernel of excitement for where this made sense in the first place?
Yeah, I'm happy to kick it off. I think in general, like you said, crypto and AI is a massive intersection. And I think speculation maybe took everything away from where it actually was. You had a lot of AI meme coins launch, Virtuals launched, and there was a lot of hype around kind of agents. But back then, agents didn't do a whole lot. Since then, actually, Virtuals has enabled agents to do more things, and it's quite interesting to follow. But outside of that, there was only a few successful kind of breakout projects. Another one was Bittensor, which we'll touch in this podcast, but not a whole lot. And there was a lot of venture funding that went into this, and particularly on the infrastructure side, which I think looking back on maybe in the last 2 years, it's hard to find many successful crypto AI infrastructure, and maybe people jump the gun a bit in terms of like where the value might actually be in the crypto and AI space. Like I'm quite bullish on kind of like the agentic layer and the application layer, and I think the infra layer in crypto AI is actually commoditizing quite fast, apart from kind of building the guardrails that make us as humans trust what the agents are doing for us in crypto itself. So you had a bunch of startups working on layer ones, kind of like agentic frameworks, etc. But I think one of the main reasons where it failed was really just in terms of the complexity of what we can do with these agents on chain. I think right now, like most of us probably don't use agents in our day-to-day life. And that's a problem because in Web2, many of us are using agents in different ways, sometimes without even knowing it. So I think crypto has a long way to go in terms of like understanding the demand and then actually being able to serve that demand with frameworks and infra and applications that people actually want to use and pay for. So I think it's just a market misunderstanding exactly where the demand is coming from and speculating on where it might be, and actually realizing in hindsight that it wasn't really there in the first place.
Yeah, like I think there's just so much noise in that like first generation of the crypto AI intersection, and my like I don't know read from a distance, to be honest with you, was like okay, we see this AI is finally kind of here. It's being led by huge centralized research labs, and I think there was like a fleeting moment where it was like, okay, can you really trust these infra labs? Like, should we have a decentralized version of this, right? That's, accessible to everybody, open source, like, running on open source, like models. And you get like some, like sort of trust minimized guarantees about what you get back. Right. And the problem was like, the like rate of acceleration and progress from those centralized orgs was so much, larger than people kind of expected. And so if you looked at it from afar and you're like, okay, I'm going to ask like an LLM, a question. Obviously the one that's a centralized org is going to give you like the fastest answer, right? Rather than having a bunch of like folks all run that same question and give you back something like that is they all agree on, right? And they're going to improve the models faster, right? And crypto will always lag. And so like the just like decentralized version of, let's say, like LLMs or LLM training just didn't really play out. But I think like we've kind of turned a corner here, where I see it as like three categories that are interesting. One is more like using crypto like incentives and coordination mechanisms to bootstrap a supply side, that can, of like AI inputs, right? That you can then build a product with. That's like the Bittensor side of things. The other is just adding like additional trust assumptions or like trust guarantees to AI. And then the third one is just AI like agents that can move money on chain, right? So we'll cover all of this stuff, but I think there's like it's becoming clear where it's actually valuable. And this is not like if you talk about crypto and AI, it's not just one thing; it's many, many things. So,
yeah, I think just to add my piece here too. I think this is a little bit of a tale as old as time when it comes to. I think there was a lot of infrastructure that needed to get built out. And, we'll talk about how effective something that we say often is crypto is amazing at coordinating incentives. And that's true in some, not all instances. And I think if we look at the last couple of years, the levels that needed to get built out first to make AI usable, just in this chatbot early instantiation that we currently have, were really like close to the metal, like, FP&E heavy, that type of stuff. So like if you were to break down the AI value chain and everything that needed to work, there is the compute, kind of like the atoms and silicon layer. There is the infrastructure layer. So like data centers, getting these massive clusters of GPUs and making them network faster. There's like the model development layer, which is actually tinkering with them, like these foundation models. There's the inference and then real-time kind of intelligence layer. And then finally, like tooling, agents, and middleware. And those needed to kind of proceed in chronological order. And I think we're going to, unpack maybe the inference layer. But I think what's clear over the last couple of years is that the first four value layers there were just not ever meant to be coordinated by crypto. And I don't think there's a lot of great evidence yet. Like we'll talk about this with DePIN, that crypto is capable of coordinating that in a decentralized, incentive-based way better than a highly functional centralized organization. And I think, so there's just what is the right coordination mechanism for all of these resources. And when it's super fixed asset heavy, I just don't think crypto is well suited to do that. And then also, in order for these things that where crypto might be a really interesting use case and fit, like agents, we needed to build out all this other stuff first. And also, I don't think we're giving enough credit to like crypto being still. I don't know if you guys remember, there was a whole narrative around AI's private or OpenAI's private, but you can trade X, this little AI shitcoin. That I think that was the prevailing reason why people were actually excited about it, more so than the actual tech. I would posit to all of you guys.
Yeah, and I think, Mike, just to briefly add on to what you were saying, if you look at the kind of AI stack, starting from the bottom, you have kind of compute networks, then you have kind of training and inference on top of that, more like agent platforms, etc. on top of that, making use of the infrastructure itself, and then apps on top of those agents. And I would say maybe for us in crypto, like for me, it makes a lot of sense that agents will use crypto rails. Crypto rails are 24/7. They're permissionless. They're much faster than what we have. They're open. They're not siloed. There's a lot of properties that crypto gives that, in my opinion, agents will need long term. But in terms of where crypto can compete with AI, I think the other layers, like you were saying, Mike, just then, the compute, the training, the inference, etc., it's very, very hard to compete with centralized incumbents that have billions of dollars they're throwing at this. And then crypto kind of copies centralized incumbents and they try and bring it to crypto, but it just doesn't work the same as what we have outside of crypto. And so then really, as in terms of opportunities and where crypto can push AI forward and where the intersection actually is, I would probably make the argument that I do think it's actually at the application layer, at that agentic layer, using crypto rails and giving users a better UX than they can get even in the centralized landscape. And I think that is really where Infra could have been built around and is still being built right now. But that is kind of a more emerging area in the crypto and AI space that we'll touch on in this podcast, I'm sure, that I personally think is the most interesting where crypto can actually compete.
I have one thing that I rarely ever hear people talking about, and it's related to what we're doing at Blockworks in very early stages. But it's been very difficult to put these words into a category, so I haven't heard anyone talk about this. But Myles, I think this is going to come up when you talk about kind of guardrails and provenance for data for crypto. But Ribbit put out a piece, and I'll link it in the show notes here, where they connected the idea of tokenization as we understand it in crypto with tokenization as it exists within literally tokenizing words and phrases for LLMs to understand. And the connection in their mind, which I thought was beautifully succinct and really powerful, was the idea of making the real world machine readable. And that's a very simple concept, but it's a super powerful concept in my opinion. Because when you make essentially everything, and in the case of crypto, that's mostly financial data, machine readable and very easy to interact with, you kind of completely redefine what software means and workflows that you build. So, literally, if you just think about the process of what does it mean to create like a piece of fintech or financial software today, you would kind of go with this very historical product approach, and you'd look and you'd create a user problem, and then you'd create this big PRD, you'd build software, and you kind of think of engineering on the back end. Versus the way that this might work in the future is, like, one beautiful thing about crypto data, at least in different virtual like VMs, is that it's standardized. And if there are agents that are actually building software in real time, you might actually not start with or worry too much about that, because the user might end up building a lot of custom things. It might be all about how you structure this standardized data. It's a super unique thing that only exists in crypto, that your core critical company data, everything about your costs, your revenues, there is off-chain data, so there's asterisks to this, but huge component of that, the whole history of your business, could be machine readable. And you could easily ask an LLM to build workflows on top of it. It sounds esoteric, but the idea would just be, like, if you think about this from the user perspective, is instead of having one piece of software with a ton of seats, you pay to have your data standardized, versioned, authenticated, structured in such a way that an LLM could easily query it, come up with customized workflows, and answer any question that you'd have in the whole history of the org. It's like, it's a totally different way of, I think the idea there is personalization. I think you're going to get much higher degree of personalization and time, like quick decision making, once agents are taking these actions on the raw data that's been structured in a certain way. So I think the way that we build products, and especially SaaS, is going to get completely reinvented, and it's going to happen on crypto rails first, because this very unique property of data, but also because crypto's mostly startups, and you don't have this incredible tech debt of massive, multinational orgs, which are, have like their Oracle on-prem software and like all these different licenses, and they're going to have to untangle that, and it's going to take forever. So yeah, I think crypto foreshadows the future in a number of ways. And I think just by virtue of it's a young industry and has this really unique property around what the data looks like, that you're going to see what the future of organizations look like here first before anywhere else.
I think, Mike, I actually might throw a question at you here, which the audience might be interested to hear about. I mean, outside of crypto, they talk about AI and, how agents are going to sort of completely overtake SaaS, and, to some extent, Blockworks is a SaaS company. Are you thinking, as a crypto company, are you thinking about using AI to replace some of your more software as a service, or like, how do you see it disrupting Blockworks right now, like the entire AI category, if you have to throw it back on that?
I think where the space is generally going to move over a long period of time is like outcomes-based pricing. And it's like in this Ribbit piece, I thought they did a really good, it's a high-level framework, but I think it's a useful one, is thinking of businesses as token factories. You have a certain number of you essentially are requesting a specific output, and there's a certain amount of computation that happens before it outputs something. So I think that it's going to be the cost is going to end up being so variable in this new model that you won't be able to do standard pricing the same way you were doing within SaaS. And this like per seat model where you kind of lock everything in and try to jam people into like too much structure, I think is going to break pretty soon. So yeah, I kind of agree with all these trends that you hear about, that I think it'll take longer. Like we're still have SaaS products with subscription revenue, and I think it'll take a couple years for that to really change. The other thing too is I think buyers are very used to paying in a subscription form, and like you kind of need big companies to innovate on this first. It doesn't make sense to move on things like SaaS pricing before like a big incumbent like a Google or an Apple or something like that moves first, just as a strategy. So.
Right. And to double click on that though, like what would that mean? That would mean like, okay, now the majority of people are not coming to Blockworks directly. Maybe they're asking an agent to go write like a pull data for a research report, or pull data that informs like actions on their behalf. And now you have to like change your product to be like, have like agent-based interfaces, right? And I think one of the big pain points right now is everybody having to give the API keys to their agents that they pay for, right? That's where X402 will I think come in pretty interestingly like down the road, is just moving over to like usage-based models. So it's either usage or outcome-based. Like I totally agree.
Yeah. Outcome is really tough to measure. I think everyone's going to want to go towards outcome-based. The problem is quantifying outcome-based is really difficult. And that actually is based on a company taking the time to define what an outcome looks like, right? So this is actually one of the big geniuses of Google is they were the one, not only did they create the best search engine that ever, like advertising engine that's ever existed, but they also taught marketers how to do attribution. So not only did they create the best thing, but they took the time to put together, a framework for how to do attribution for marketers, and then they educated everyone. So they wrote the rubric, right? They built the machine, then they wrote the rubric, and they don't get quite enough credit for writing the rubric. And it's difficult to measure something like an outcome, right? Like let's say you were building, some sort of marketing module or like marketing piece of software where you're trying to acquire customers. Attribution is super difficult there. How do you measure an outcome? You need, software providers will eventually define a benchmark or create a methodology but it takes time to educate your customer there.
I think it's, the way that I could see it developing is like, it's really what you pay for. Like the outcome maybe that you want, you're willing to pay more for it, and maybe it's better defined, and then you pay a certain amount for that. And then if it's not the outcome that you define, maybe you pay a bit less for that because the agent can't execute on what you want. I think, Mike, you also touched on a few interesting points around like relevancy. And so if we move into this world where agents are the ones that are actually paying for maybe something like Blockworks, how can a company like Blockworks make sure that when an agent is scanning the internet, that it is pulling from Blockworks data over maybe some other peers in the space? And like, do you have to pay for that to get in front of the agents? Is there some sponsoring ads going on there? Like, it's unclear as well in the AI space right now what this even looks like and how things will become relevant. And we're kind of going through that Google moment all over again, but in this time for AI. And so I do think in terms of crypto and AI and opportunities, like this is potentially one that even centralized crypto companies, incumbents, like maybe even someone like Blockworks, can get very right. and really actually become like a behemoth in the space by understanding like how to get in front of the agents at the right time to get their data in the hands of these agents, because agents are hungry for data at the end of the day. So like I do think that the crypto AI landscape is still new. Like you said before, it could take many years before maybe you switch over to a more agentic kind of software. And I think that's really where we are in crypto and AI overall, where there's been a lot of experimentation, but realistically, I think we're probably still 2 or 3 years away from understanding exactly where it's going to hit the hardest.
Yeah. Why don't we break down some of the major categories that people have been excited about in the past? And why don't we start with this idea of coordinating compute? Because this was, like, we talked about this a little bit at the top of the episode, but I think the very first application that people were interested in was Render, Akash, Jensen, these sorts of protocols where it's kind of like Filecoin, but for GPUs. And the idea here being, instead of centralized training, you could maybe do painting a broad brush, like some of these categories moved up into inference, but just for painting with a broad brush purposes, decentralized training and physical infrastructure was a huge one. And then you had some other protocols like move one layer above the stack there and get to inference. So this is a little bit where Eigen is currently playing, kind of, not 100%, but kind of. You also had like Ritual, if you remember that protocol, and there are some other pretty interesting one, like one that flies a little bit under the radar is like Hyperbolic is an example of this. But and then Bittensor was this kind of incentivized marketplace for bringing inference models to bear. So can we start with the first category here of just decentralized compute? I'm just to not bury the lead. This one doesn't seem like it worked super well. So what went wrong here, do you think, in this category? Or how much do we like this idea of leveraging incentives in a decentralized way to improve AI outcomes?
I mean, I think it's like some very, very important nuance. Like we were just talking before the show started. You're not like the product experience of asking OpenAI or Claude a question and getting it like a response back is always going to be you asking like and a validator set of 150 like machines to do like the same task, check each other, and then give you back some result, right? And so you're not going to like pick the shittier product for ideological reasons. And I think I think Bittensor has found its niche is it's the like amount of money and time and resources that would go into standing up a new AI based service that is not built on one of the big incumbent labs, right, is like getting more and more and more expensive, right? In the same way that it's the classic DePIN like sort of thesis. Like if you were to try to stand up a new cell network around the world, that would be a Herculean task that would require, maybe definitely billions, maybe tens of billions of dollars. And so where Bittensor's kind of found its niche is like, well, okay, you don't want to be totally dependent and get on like one of these big models that could just rug you at any point in time or Sherlock you. And you don't want to go out and have to raise like $1 billion to build like a defendable, business with the sufficient amount of resources that you would need to actually like stand it up, right? And so we've just got a big pool of operators, people running machines, kind of waiting around for jobs. They get paid, some financial incentive of like the Bittensor token, right, to go do a job for a particular service. And that isn't just like doing, running models. That's also like, collecting, data, right? Or like labeling data. It's doing like testing. It's a bunch of different stuff. And so like, Xavier, you've dug into it more than I have, but it does feel like, Bittensor's kind of stood up like this general purpose, coordination layer, that if you want to build a new AI company today and you don't want to go raise a ton of like an enormous amount of money, this is kind of like an accelerator, right, for your supply side. But that does not mean that the product that you're operating has to be decentralized itself, right? The product, you can build a product in a totally centralized way. And you're just kind of, paying for these resources to this open supply side. And that seems like it could be viable. But yeah, what's working, what's not working, Xav, like, is how different it is from the ones that fail.
Maybe just to touch on two, so like a Bittensor versus like on a Cash here. I think a Cash, massive props to that team, known them for many years and have a lot of respect for them. The hard part with compute networks is that it's kind of a commodity, compute itself. And so like what's stopping the next person creating the next decentralized compute network, and how you're going to compete on costs, and like what is the infra that you actually own underlying that? Is it tokenized? Like who's the actual customer, etc. And also, is it cheaper for like long-standing workflows, which are needed continuously instead of like having to set it up per workflow? On the other side, you have like Bittensor, which I think, Mike was asking earlier in this podcast, like, is coordination a thing? Do incentives work? I think to the most part, it doesn't actually work. I would make the argument actually in Bittensor, it does work. And it's actually something that I think should be studied still. And it's something that I am studying right now in terms of like, I didn't spend enough time thinking about like why it exists or why it's still working and why there are so many builders still going there. Realistically, I think what Bittensor does well, and maybe better than just standard compute networks that are maybe more commoditizing, is it incentivizes miners to provide very, very cheap compute using their token, and they kind of play these token crypto games to get what they want. And then as a result, people who actually want to pay for this, who have the model, for example, that need to train, they're willing to go to Bittensor because it's probably a lot cheaper. I haven't done the maths here, but I expect it to be a lot cheaper than other compute networks because it's subsidized by the Bittensor token. And then they kind of speculate on the appreciation of that token. And it's a classic crypto circle. The question is, if the token doesn't appreciate, is Bittensor still as interesting, and does the coordination work in itself? That's like TBD. However, just to finish quickly, I do think there are some subnets in the Bittensor ecosystem that are showing very early signs of some level of PMF. And I think their target market is more like indie AI developers. And there's nothing stopping indie AI developers now in this day and age with the amount of tools they have. And it just takes one or two ideas with enough compute and training, etc., to create a product. The next question is, can you productize it and make it feel like it's not a crypto Bittensor AI app? That's super difficult. And maybe that's actually where the bottleneck is right now and the constraint in that ecosystem. But that's how I see it.
Could I maybe take the other side of why I actually don't think this is? I am starting to, maybe as a hot take. Do incentives work at all? I'm actually not really sure. Like maybe in a very, very select number of cases, but I think I'm starting to get on the train of incentives don't really work. And the reason why is the best thing that you could. There's so much reflexivity in crypto. The very best thing that you could do for adoption of your product is to make your token go up. And as long as you're dumping out tons of incentives, even if you actually get more usage, your token will go down, and therefore people will not use your product. So I think this is why there's so much confusion behind the like my this is one part of the reason there's confusion around this, but my metrics are actually improving, but my token price is going down. It's like, yeah, because you're paying a ton of money for that activity, right? You're just paying for that activity. So, I think that it does come down to the maths here. And yeah, I think people should just start looking at this stuff as though it's actually cash compensation, because it is. So I don't know.
The Bitcoin people would push back. Like that's worked out pretty well. And it's because there's like a cult sort of, belief around this token. And like what it represents. And I think, Bittensor folks are like, they're into Bittensor. Like there are entire funds just dedicated to stacking Tau. And, I think it's super interesting. And I think like a lot of us faded it because it was mixed in with all these like VC backed, typical, like turned out to be kind of scammy or like at least low end, short-term plays. There was the original crypto AI, like narrative. And Bittensor is not VC backed. It's kind of got like a little bit of hyper liquid, sort of lore to it, along with like obviously trying to play off the Bitcoin history. And yeah, I mean that you have to, like, I agree with you, unless there are people that are actually just not selling the reward tokens, immediately, or like, they're selling maybe a little bit of it. But yeah, by the way, I don't know what like Bittensor's chart looks like. It's probably not amazing. But
it's actually a lot better than most other crypto projects, I would say, in the last 12 months. So like they've held pretty steady. And that's why I think it's interesting, because it hasn't been negatively impacted by the current cycle. And I do agree, Mike. Like, I think we're both aligned that demand matters, again, more than anything. And you shouldn't just incentivize with tokens on the supply side and get people doing certain things without anyone actually wanting to use it in the first place. We've seen that fail many times. The only time I think it works in crypto is actually if you subsidize enough and you have a goal to achieve, and that goal is PMF and actually getting people paying for this stuff and like actually earning, whatever revenues, fees, etc. Bittensor has this subnet ecosystem that, I think it's like 128 subnets that are allowed to go live there, at least for now. I think they're working on trying to increase that. But if they manage to get 128 subnets, it's kind of like throwing darts on a dartboard where like you just need one or two to stick. And then probably it gets talked about in other AI circles. And I spoke about this with my intern yesterday. Shout out to Spencer. He's been doing some research for me. And there is one, I can't remember the name like right now, but there's one that subnet that did better than Claude Code 4 in terms of like performance and what you can do. And that's like very cheap to use and was very cheap to build. And it just takes one or two breakouts. Like maybe it's some vibe coding thing, maybe it's some like prompt thing, like who actually knows what it is, where a bit of luck and a bit of skill, and then the whole AI space is talking about it as well, because it'll be a breakthrough not just in crypto but also in AI. So there's always that small chance, and that's why I think it keeps people interested in the ecosystem.
But is it, so that is kind of like the thesis here, right? They can offer, because their supply side, like their capex, is being subsidized by Bittensor, right? They should be able to build products much cheaper, which means I could sell it for much cheaper. And so like that is the thesis. Like what it seems like is like you get these, potentially more success in like the long tail of like services, right? But they are going to be cheaper than, a company that had to dole out like $2 billion of training costs before they could even release the product, right? And the question is like, is that cheaper going to come at the cost of like quality, latency, like reliability? Because it is, an open supply side without SLAs and all of that good stuff. And it sounds like, there are a couple projects over there that are like building really performant, as you just mentioned, Xavier, like products. And they were able to sell it much cheaper than their, centralizing like counterparts or competitors. So that to me is the thesis, and like maybe I'm missing something, but it's interesting and it's worth paying attention to. If they can win demand, right? Because it's cheaper.
I wonder if, again, this reminds me of a little bit is when crypto natives were trying to sell Ethereum, they used all these words like credible neutrality, and you had a gajillion ways of saying we have the most validators at the lowest cost. I mean, like all these buzzwords and all this stuff. And now that you actually have financial institutions building, it's unclear that they actually care about that. But what they do care about is one property, which is that it's 24/7. Like that seems to be the killer app, right? And it's unruggable and all this other stuff. I don't want to trivialize any of that, but I think that's, when you hear people from it's like, wow, this stuff just happens 24/7. And that seems to be a huge component of it. And, I wonder with some of this, with the Bittensor stuff, I wonder actually if the killer feature is that it's just close to being on chain and the proximity of these models existing on chain already. And, I think a lot of crypto businesses will be the first ones to leverage and utilize AI in like when we start to get to agentic commerce, like that kind of way. And there's value to like proximity of an inference model living on chain so you can take action quicker. Like I think it actually might be more of the proximity thing than the cost thing. I haven't seen any evidence that I've colored me like extremely skeptical that any of these marketplaces will be capable of producing a better product, but the proximity and it existing on chain first, I see as being super valuable.
Yeah. So I have a few small things here. So I actually wonder if it's going to be more of a compliance thing long term. So like, at some point, maybe regulations come in and you need to make this AI as explainable, transparent, auditable, etc. And how the hell are you going to do that right now with current systems? Like you're not. Some of the other projects in the past that I've worked with that also others people know of, for example, like Eigencloud, they're working on inference and computing kind of off chain and then verifying the compute was done in some way off chain, on chain, like, etc. Like the classic kind of layer 2 framework that people were familiar with listening to this podcast probably. The hard part is like, how do you do inference on chain and like get people actually executing things like fully on the blockchain, fully transparent, fully auditable, like no other trust assumptions. That is quite hard. But I do see a future where that comes to blockchain and people are working on this right now. And I do think there will be a breakout team that understands the compliance requirements, and then probably the value will accrue to the team that makes it the easiest for companies already using AI that need and must, as per regulation, to use compliant AI to like make it very easy for them to integrate the same models onto their stack on chain.
But let me just to be clear, like you cannot run inference on chain, at least in as smart contracts that we know today, right? They are deterministic software. Like as an input, it runs exact same way, like every single time, right? Validators run this code and the output is the exact same and the validators check each other. That's also the reason the smart contracts cannot do things like call APIs natively, right? Because it's not deterministic. First of all, validators are not going to like set up, APIs for every single smart contract that needs one, right? Even if they could, they would get back different results and therefore they couldn't agree on the results of the next block. And so what we're talking about here, I think, is like maybe slightly different things. Like we are trying to get sort of deterministic or like smart contract like guarantees from inference that is of course run off chain. You can do that by like having a bunch of operators run this in the same box, right? And you can add like basically give the consumer assurance that the model has not been changed under their feet, right? And then, there's also like agents that we're talking about that do stuff in crypto, like make on-chain like transactions. And that can be done also without any sort of verifiability or determinism for like, the model that's being run, but the agents are controlling money and moving on chain. So I think these are like very different things. And then the Bittensor thing, like there is nothing that's even close to on chain there in terms of what we typically think about it. Like tokens move around Bittensor, and they've found a way for like the validators and the miners to check each other, but they're not doing anything that's like DeFi related. Like to be clear, it's more just it's like a supply side for like regular products. But yeah, that's why this is so complicated, because it is like there's a lot of things that sound similar, but I think they're like pretty different and have different considerations.
I think you're right. I think you're right, Myles. And yeah, I think that's actually one of the biggest challenges about LLMs are fundamentally non-deterministic. Smart contracts are super rigid in that sense, and getting those two things to marry up, maybe they're like that feels like there's a big unlock there. But if the models don't live on chain currently, and that's not possible. One thing, getting back to maybe Xavier note about compliance. I mean, you could imagine just imagine the compliance over. Like, one thing that is absolutely coming to market soon when clarity happens is if you have a publicly traded instrument, which is a token, you're going to need like essentially a lighter version of what public companies require, which is a basic set of disclosures, risks. People need some transparency into the operations of the business. And you could imagine, again, if you are generating all of this data in a way that an LLM can easily query, and the LLM, it's provably non-tamperable, like that should be a dream for a regulator, right? Or any set of investors. Like imagine you can just ask almost any question of a business's database and get like a pretty good, honest, authentic answer out of it. That, like, can you imagine what that would do for I mean, you can still do all sorts of shady things, I'm sure, like fraud and whatever, but the more that's on chain, and you can understand like an LLM can query it and you can make sure that it hasn't been tampered with, and that's an authentic answer. Wow, that'd be great. What an interesting world, right?
Yeah, but it also, like, the more, if it's literally on chain, then that is in itself an attack surface, right?
Mm-hmm.
So, like, that actually is a challenge.
Explain that. What do you mean how's it an attack surface?
Well, it's visible, right? If you like have something like the guardrails or the policies of like, something that's going to happen off chain is visible on chain. Now that's a potential attack vector for somebody to try to, game this or something along those lines, right? And so, like, this is, I think, pretty challenging. And yeah, it just depends on like how many use cases are there where like either a user or a company is going to conscript some AI model to do a job, and they really care about what AI model ran, right? That's like kind of the eigen thesis, is that there's going to be a lot of cases where they really care about that. And maybe that is for compliance reasons. We'll see, right? Maybe it's for risk reasons. Maybe they just want the cheapest or the easiest, service to run. And maybe that is going to be a Bittensor service. I don't know. Or maybe they just care about the outcome, and the outcome satisfying the constraints that they've, basically defined, and like the guardrails that they defined. That's the last one is what I'm spending a lot of time on these days. But yeah, I'll pause there.
Maybe we can move on to DePIN here as a category, which has always been somewhat adjacent to AI, right? Like the idea here is you're kind of, again, if you kind of look at this, literally I was on the website for Akash, and it's kind of the like Airbnb for compute, right? You're kind of coordinating this, these off-chain pieces of infrastructure to produce something, to create this marketplace. DePIN has really been very similar to that as well. And like Myles, maybe I can kick it to you here, but I'm curious how you view DePIN within the context of the intersection of AI and crypto, and like what, if any, fruitful material there is there.
Yeah, I think it just goes back to like, it's there. You don't want to be maybe in like the middle ground either. Like, releasing products from like one of the big incumbents is going to probably go well, and you'll probably win every market that they really go after. And then I think on the other end of the spectrum, if you can bring a product to market as cheaply as possible that's still equally performant as the big incumbents, then like you have a chance at getting a wedge here. I think outside of Bittensor, most things have kind of died. And Bittensor subnets, like there's a couple that are doing well. And it's not clear if people are like, using those services because they do love like Tau, or if like they're actually winning. We were talking, comparing this to like GeoDNet, before we got on. And GeoDNet clearly has a product that like, regular people that know nothing about crypto really like, because it's better than what had, it gives more accurate like GPS data, right? For something like precision agriculture, right? They're going to selling this to like farmers, like big, middle America, like farms. And that's great because it's a cheaper, better product. And so if you can get cheaper, better products from DePIN, great. If you can't, then like this will just not work, right? Because we've seen DePIN like work sometimes. We've seen it, kind of fizzle out. Like, I don't think any, like Helium, I don't know how well they're doing these days. But yeah, that's generally my take on it. I know there are people who spent way more time on this than I have, but I think there's a chance. I'm not writing it off yet.
Yeah, I can maybe add a little bit of color here. So there is one category in the DePIN space, which I think is still potentially interesting. Maybe timing is still a little bit too early, painfully early for me, because I've been working with a team working on this problem for 4 years. But it seems like now they're getting first interest from enterprise AI customers, which is really interesting. And so like, many listeners probably have heard of a team called Grass. Grass is like a kind of tab compute network, provides certain compute to AI providers, etc. There's another team which is very similar, which we work with very closely at Fractus, called Bless. And we invested in this team many years ago. It's a very similar concept to Grass. It's an edge compute network, but they've found a new go-to-market, which is actually using the edge compute to they will ask users for their permission, and then the user essentially gives permission in how they're using certain platforms, for example, like ChatGPT. And then Bless will anonymize this data, privatize the data, and then basically collect the data on like 100K of their crypto DePIN users, and then sell that data on to like AI companies wanting to get more insight into how people are actually using LLMs, for example, right now, which is actually quite hard to get this data, funnily enough. And so, yeah, again, here it's quite a sort of like out there concept in terms of some DePIN things are so early where like we're still only just seeing demand actually on like how we can use this in the first place. And I actually am still like optimistic on the data side. I think Varna, Grass, Bless, there's probably like 5 to 10 of these I could mention off the top of my head, where I'm sure if you research any of these, they're making some some progress into like actually selling on to people outside of crypto, which is where I think it gets very exciting. I will say though that like I've experienced this quite frequently recently, where a lot of teams realize now post-regulation there is a market outside of crypto. But if you have a token, it's like, how do you sell on to these customers? Then you have the token and they're looking at Bless Network and they're like, what the hell is this Bless Network token on CoinGecko? And like, is this a scam? Blah, blah. So it's difficult with DePIN because you have the token and then probably you're selling on to people outside of crypto. And I don't think we're there yet in crypto where there's like a lot of comfort, but it might come very soon. Who knows?
Right.
Yeah.
Go for it, Mike.
Well, I was going to say also, I think some of this depends on, there are different categories of DePIN as well. Like you could even lump like IONET or Akash or Render into like deep, right? That's physical infrastructure that's being coordinated by token incentives, right? So there's kind of like a compute layer, but then there is this data layer as well. And actually the examples that I was thinking of was HiveMapper. So the HiveMapper business model, right, is basically like, hey, give out token incentives to, each one of these things is like, hey, here is some percentage of the token supply to get you to perform an action, which gives, in some cases, a very specific set of data, right? So like GeoNet is another example of this, where they can actually pinpoint, within some crazy small distance, right? And that, like, the question is just, there's a, within all of these different data, DePIN plays, I think there's a real difference on how commoditized the data is. So if the data is something which is commoditized that the LLM scraper gods are eventually going to get around to scraping, you probably don't have a great business there, right? And you're probably equivalent to, a mainstream media outlet pre-Google, right? Where Google just crawls all of your stuff and they end up extracting all the value. In the instance of something like HiveMap, so HiveMapper's business model, to remind people, is you have a dash cam, you're driving around and you're mapping this stuff, and you actually might try to sell that data back to large purchasers of geographic data. So the LLMs might actually be a really good customer for you because there might not be a super easy open web solution way to get that, and it's consistent. You have to keep buying it. So that actually, I think the devil is in the details here in terms of what sort of DePIN category you sit in, and then also what sort of data vendor and reseller are you. And I think the only way that you can build potential, like ultimately at the end of the day, I think that even if you have a very proprietary source of data, you never want your whole business to be selling into an aggregator, right? Like eventually that aggregator will squeeze you. So the question is, can you build, can you find proprietary ways of getting access to your customer that doesn't entirely depend on LLMs as well? But I think that it's like, if you are, the way that I would put this is, imagine if you're a data reseller to an LLM, and the LLM, independent of you, is what's making that useful, like turning that into an insight or an action. I don't think you have a very good business.
No.
If you are the one that is making that useful via LLMs in some way, that's a better business.
Yes, and that is, I think, like become very clear as the winning formula for DePIN. Is like you aggregate like some scarce resource, right, that powers your product, and you can do that much more cheaply than paying out cash. You can do this like programmatically with the token that you mint out of thin air. And then in between that side and the customer, you have a company that's just like a normal company, right? And it's like Xavier was saying, like they get nervous when they're like, okay, well, and once they actually double click into what this product is, like what's happening in the background. It's almost like you want that to be a completely separate website, completely separate everything. And then you just have this buttoned up company that packages whatever resource it's like aggregating, right, into a product that people can easily consume and feels like a normal product. And if you get enough revenue on that side, you can start doing it to, like, I don't know, burn the tokens or buy back the tokens or do something.
Mike's favorite.
Yeah, exactly. Make something, give like some reason for people to actually want to hold this token that you continue to like shill it, like mint, inflationary like incentives out of.
We keep teasing this buybacks episode, but we have to do the buybacks episode.
Yeah. It will take 5 minutes.
Maybe as well, just to double click on something briefly that you said before, Mike, I do think that there is a business, like there is data out there, which like if you have enough, compute, maybe using crypto incentives to get that compute in the first place, that people will pay for in like droves. And the question is like, what is that data? And you said, Mike, before that, the data feeding into LLMs, there's like a lot of value there. Like I agree, there's definitely value there. I also think there's actually value in understanding how the hell these LLMs work in the first place and how businesses can leverage LLMs and get in front of the right people and like make sure it's a relevancy problem again, like I was saying earlier in the episode. So I think maybe relevancy is actually a topic in crypto and at the intersection of crypto and AI, where like if you can help a business become more relevant in this age of AI using either data or agents or whatever it is, like I do think there is actually a massive opportunity there in DePIN, across DePIN, agents, etc., for crypto businesses to become more relevant in this age of AI and make sure they're always at the top of being discovered. So I'm quite bullish on that as like a category as well, I'd say, in the DePIN space.
So rounding up here, how do we feel about this whole bucket of kind of one bucket of AI and crypto as an intersection, which is kind of compute marketplaces and and also leveraging incentives to coordinate computer data in some kind of way. Maybe we can lump DePIN in there, and also some of the more decentralized training and infrastructure plays like the IONets, the Renders, the Akashas, and also like the kind of Bittensor and Ritual. I don't even know if Ritual's doing anything anymore, but the inference layer. How do we feel about this as a whole category? Like, where, if you had to slice and dice it and to create some rules and takeaways, like what makes, which parts of this are you bullish on versus not? Like, how would you summarize everything we've said so far?
Yeah, I think on my end, after sort of speaking with many crypto AI teams the last 2 years, I would say at the infra layer, I'm a bit more bearish. I'd say Bittensor is probably the one team that I think is doing a good job there. And they're doing a good job because they're coordinating well and using crypto incentives. And they've also found a market for people who actually want to use this stuff. And this market, it helps them build better products. And so I would make the argument that Bittensor is one of the very few crypto infrastructure projects at the intersection of AI that is doing a great job. I think it's really, really early on the demand side for products and like apps. And I think that is where a lot of value is going to accrue, in my opinion. And I would say in general, like we talked about a bit on the DePIN side, you want to think very hard about demand and like what people are going to pay for here and like why use crypto in the first place. And then when you've thought very hard about that and you actually build the product, you then want to think very hard about how you distribute the product to the customers who are actually paying for that. For example, if you have the token and then you're targeting these non-crypto customers, was that the right move in the first place? But then there's a trade-off there. And so I think that we're early. There are some things that are working. Some infra is working, but I do think the applications is where most of the value is going to accrue here, using crypto properties, helping us do things across software in this open way that we can't do right now with centralized incumbents that we're still only just really scraping the surface for. So that's what I'm very excited about right now.
Yeah, I think I don't have a ton to add on the DePIN side. It's really just a question of like, are these products competitive? I am much more fascinated, I think, like in this general, future where it's like, okay, every company in the world has, AI transformation top of mind, whether that's their internal, like automating their internal workflows and like full on jobs being automated to AI, right? Or they're, making their actual products more like AI native to their customers, like having a chat interface for, when you go on like Amazon, right? And now an agent's going to like give you like shopping recommendations, maybe even buy shit for you, right? And that's where like I think crypto and AI both like reduce costs a ton. Whether that's making like able to do more with less headcount, or whether that's reducing transaction costs. At some point in this transformation, it's very clear that like the agents that you're using to automate jobs or to create new user experiences, right, are going to need to hold money and do things with money, right? And that's going to have a huge spectrum from stuff that's super low stakes, like me telling an agent to go buy me like socks, right, on Amazon, to something that's like, automating like your company's treasury ops, right, with an AI that is going to keep your, everything optimized at all times, right? That's pretty scary if anything goes wrong. But I think, at some point over time, like it's going to happen regardless. I have very high conviction in that. And a lot of the transaction, or like the most natural way for an agent to handle like value, is digitally native, tokens, right? And so that's kind of where like the crypto will, I think, play like a big role. It'll just happen very much so in the background, and like the more it'll be abstracted away from like the end, companies that are using like automating things, or like the end users that are just trying to have like, a normal like shopping experience. And yeah, it's like using stable coins in the back end. You can kind of see how this is coming together, right? Like Stripe is a great example. It's like, a checkout option on every single, on most websites. Eventually, most of those like e-commerce sites are going to have some sort of chat interface. Then it's going to have an agent that's going to move money. I think they're probably going to use like stable coins, right? But we'll see. There's a lot. It's still sort of TBD on at least the timeline of this.
I think maybe for my take to close, I think on the lower level infrastructure side, it just remained pretty bearish on it. I think one thing that we didn't even talk about really was latency, and it's kind of like quite silly to look back on some of the distributed training pitches, and when you like think about coordinating training across clusters, which are all over the United States or the world, versus like these insanely networked up NVIDIA style data centers. I mean, yeah, no wonder the AI people were laughing at us. I mean, my gosh, that just never really made a ton of sense. But I think my hope would be that, okay, we ran some of the, most obvious, and there's a knee-jerk reaction here, which happens in crypto, which is take a thing which is working, and wouldn't it be better if it was decentralized? And like Farcasters, maybe not to poke holes at that, but like there's always my challenge with like the decentralized social media stuff. It's like exactly X, but it's decentralized. Like no one can, it doesn't matter. You haven't innovated on the form factor in any way. So I think we're about to run that same experiment, moving up the stack towards areas which are, again, less about coordinating billions of dollars of, or hundreds of billions of dollars of compute build out, which is so highly specialized and is definitely done better by a centralized entities, at least today, towards more of like the use cases. And yeah, I mean, we're going to spend an entire episode on agents and agentic workflows and payments and trading and finance and all of that stuff. And again, my hope there is that we can get into some of the nuance around like, are we built as like betterment, RIA style easy investing versus alpha trading, spotting arbitrage opportunities. Like there's a huge spectrum, even when you say like agents are going to invest on your behalf, what that means and where that might work. So I think we should dig into that. We can dig into that next time, but this was a good first run and intro at this thorny problem. Are the AI coins going to run? What the audience want to know is, are the AI
I'll
coins-
run, mate. Don't worry about that. I'll run.
You know what? This is not investment advice, like at all. But I was looking at some of these. I one angle that no one really, I think everyone just writes off and hates, but I remain very long term bullish on, is like AI, like kind of like AI XBT like experiments. Because I'm very bullish long term on AI driven creators. I can go and look at Japan, and they're already, before all the LLMs kicked off, like holograms selling out stadiums. And yeah, I think as LLMs get better and content gets better, and it can produce 1000x better than a human creator. I don't know. I think it would make sense to me that you having a big audience, like that should work. I think that should work for what it's worth.
When Mike hologram.
If I could do it now, I would. Yeah, I'm guys. That's how I know it'll be successful, when there's a Mike LLM that that you guys don't even recognize. The whole like, wow, your takes are really good today. Wow, keep it rolling. I don't know what you drank this morning, but can I have some? All right, guys. Sorry.
Coin it. You know.
You were always a skeptic, Myles. You're always a skeptic of. All right, so we'll have its day. It'll have its day. All right, guys. This was a really fun one. I'll see you here back for round 2 on the AI saga next week.